All right, running a couple of minutes late this morning. Oh, and I need to turn uh, my light on so I get the light slightly better. Well, good afternoon, everyone. Live stream Tuesday. Uh, Lots going on, lots happening in the markets. Bitcoin, crypto, Tesla. I mean, yeah, the whole OGI sector is coming alive today for sure. Some churn and some vol, but our stocks are starting to come alive a little bit at a time. But yeah, before I get into all of that, let me just quickly go do all the legal stuff and then let's get chatting because there's a lot going on and there is a lot that is going to unfold in the rest of the remaining part of 2024 and 2025. And it's good. It's bullish. It's optimistic. It's positive. That means that soon we're going to start making good money again, big money again. All right, but let me do the legal disclaimer and disclosure stuff, which is that this live stream and the content from ATG Digital is not investment or financial advice. It's presented as opinion, information, engagement, and most important of all, entertainment. All ATG Digital content may contain errors, oversights, and mistakes. Why do I say that? Well, I mean, I don't want you to think that everything that I say is like come down from the heavens, right? I mean, I read, I research, I have experience, but like, the world of investing is filled with uncertainty, right? I mean, you have to make judgments. So just understand that. Understand also that investment operations, which is what, well, buying and selling a stock, an options trade, crypto, anything like that have significant risks and can lead to the loss of your principal. What's the loss of your principal? Losing money. I, the owners, employees, contractors, own, trade, transact in the securities that are mentioned in this video and all the content from ATG Digital. We do not take money from companies or crypto sponsors, promoters to recommend their stocks, crypto tokens. So for better and for worse, for profit and for loss, whatever you're getting is based on, our independent research, viewpoint, or experience of the world. This is very quickly the free content we put out. The Substack goes out pretty much every day. I'm on YouTube pretty much every week. Podcasts intermittent. I've been on X a lot, and I'll talk about some of the things I've been writing about. Instagram very occasionally, and then Facebook. Dean is pretty active, especially when things are moving. All right, so one of the things that I laid out for most this year is this of a transition market, and that was based on studying past interest rate cycles and looking at asset price behavior in those markets. And one of the things that we see as interest rate cycles shift, and what's an interest rate cycle? I'm talking about like a 40, 50-year cycle, right? So in the way that I'm looking at it, the cycle starts let's say in 1979, 1980, where long-term interest rates are like at 18%, and it ends somewhere in 2020, 21 with interest rates at 0/negative. So that's a 40-year cycle where interest rates just keep doing this. I mean, with big swings. And as it does this, there's certain behaviors that we can see, which is what leverage goes up. In other words, well, if you lower the cost of financing, people borrow more. So yeah, very typically, pretty much all across the economy, all across the asset classes, there's an enormous amount of debt. Why? Well, if you take interest rates from 18 to 0%, at very low rates, people will borrow more. They will take more risks. So, but then you have to then look on the other side, which is okay, so well, what happened from it's approximately 1940 to 1980, which is when interest rates went from 0 to 18%. What occurred there? Well, I mean, that's not a story that's been particularly well told because no one I don't think that many people are thinking about it like that, like in the context of like this big picture, right? It's like being like looking at like a map, right? So we, if I'm right, are in like the period from like 1940 to 1980, where interest rates with interruptions, in other words, with up and downs, are going to generally be in an uptrend. And I don't know where the next peak will be, but past history says it's interest rate cycles are 40, 50 years. So if you kind of start the clock in 1920, I mean in 2020 or 2021, the next interest rate cycle peak is, I don't know, in 2060. I don't know, I'm gonna be around by then, but that's what like the past analysis would suggest, right? So we are essentially like what, in year 3 or 4. And at least if you compare these interest rate cycles, the one from 1940 to 1980, and you compare it to ours is a very different shape. In 1940, what you saw is actually interest rates just like tick up like a tiny little bit for 28 years. From 1940 to 1968, you went from 0 to 5.3%. So 28 years to travel to 5.3%. In this interest rate cycle, completely different. Yeah, in 2021 at the lows, we're at like negative and 0. And by July of 2023, actually October 23, we're at 5.3%. So in other words, what took 28 years in the last cycle took about 2 years in this one. And shockingly, asset prices in the United States, whether it be real estate, stock market, meaning the S&P 500, not our stocks, many asset classes are at all-time highs. And this is like a shock to most people, because if you had talked to anybody, let's say from 2008 till 2020, it's like, oh, the Federal Reserve lifts interest rates, it's all over, the stock market will crash, the real estate market will crash, the economy will crash, everything will go to 0. Yeah, and the Federal Reserve lifted interest rates from 0 to 5.3%. And yeah, in 2022, the S&P 500 was, lower by 15-20%. But then just swung right back up, made new highs. Many real estate markets made new highs for sure. There's others that didn't, but the like national like real estate indices are still making new highs. So it's definitely like different than what people have thought. And this is my viewpoint. This is what has informed my way of thinking, which is that it's unlikely that all these asset prices can continue to stay at these high levels. And especially because you can look beyond valuation metrics, you can look at human behavior metrics of who is all in, who is all in with leverage, what are they doing, what are investment banks doing, what's the activity level in the IPO market, the private equity market, which are all, very driven by either human behavior and or like the interests of big money, like Wall Street. Private equity, for example. Private equity is a creature of low interest rates. I can tell you there was no private equity for the most part in 1980, and it would have not been possible, I think, like at 18% interest rates to have a private equity business. That would not be sustainable in any way, shape, or form, because the interest payments are too high. But as interest rates get lower and lower, borrow a lot of money, buy the company out, use the cash flows of the company to pay down the debt. And what's in it for private equity sponsors? Well, they get fees because it's an asset manager. So they take 1 or 2% a year. What's in it for Wall Street? Selling bonds. Some of the private equity gets resold back into the market. It's a nice little washing machine that churns out lots of money for all the folks that are like involved in the machinery of Wall Street. That's great for them. But yeah, with interest rates going back up, there's going to have to be changes. And I think one of the things that many people who are either inexperienced in markets or not actually been exposed to sort of like the machinery of how Wall Street operates, you think like, oh, well, Paul, interest rates are going to go back to zero and we'll have like, the same markets again. No, I don't think that's going to happen. I have laid out a scenario, excuse me, where we have a transition, which is that we've got very highly bid up assets, the big tech stocks, big stocks in general, that are now like bid up to crazy high levels in terms of an expression of like their valuation, 20, 30 times earnings, 10 times sales. I mean, and then when you go and look at these as businesses and you're like, would I pay 30 times earnings for a business that has had one growth year when like they hyper stimulated the economy? Would you pay that? Yeah, someone with 30 years of experience, no, I would not. Does it mean that like prices are going to crash tomorrow? No. Why? Because people don't give up on trades that easy, especially if you've made money. You just think about your own behavior. When are you most likely to sell? I can tell you it's not when you've made a lot of money, right? Because like the gains that are there in that position, kind of like they make you feel good. They act as protection. They're like, I'm okay, because like we all measure from like where we bought. So people don't tend to sell positions where they've made money. They tend to sell positions where they've lost money. So at very high prices, are there going to be a lot of sellers here? Nah, I think it's a slow drip down process, but there are definitely going to be sellers. I mean, we know that Warren Buffett is selling huge amounts of Apple, huge amounts of Bank of America. We know that Jensen, CEO of NVIDIA, has had a programmatic selling for the better part of a year. We know that Mark Zuckerberg's been selling. We know that Bezos has been selling. So in other words, the insiders, I mean, they're cashing out slowly at a time. And they're accumulating money. I mean, and you can say, well, Paul, I mean, their wealth is there in it. Yeah, but it's a combination of how high those prices are and the fact that they're selling that tells me that like I don't think like 10 years from now we're going to see a substantially higher price for the companies that comprise the S&P 500, because from 30 times earnings, from 12 times sales, I don't think there's that many professional investors with their fingers on the control that'll be like, I'm going to pay 50 times sales, I'm going to pay 100 times sales. I don't think like professional investors are going to like continue to bid up. So that means that we're going to have a trickling of like selling that goes on for many of these bigger stocks. And that means that money's going to trickle someplace else, because with rising interest rates, it is going to drive a change in priorities, in behavior of like, what are people always chasing? Well, they're chasing returns, of course. And where can you get them? Well, you can't get them from the very big stocks, and then you go search out. Well, you'll get them from greater growth, greater scarcity, some form of greater reward. So greater growth, well, how would you measure that? Well, that would be through sales growth and then through earnings growth. Greater scarcity, how would you measure that? Well, I mean, you got to cut the number of shares down of your company and make it more scarce, so that whatever growth you have, it's allocated to like the smallest sort of like investor base. And then greater rewards would be like, well, I mean, if you have a genuinely like business that is growing cash flow, maybe you're like you can increase the amount of buybacks, increase the amount of dividends, but you have to do it from like where the stock price has to be low. It can't be from where like, oh, I'm at 30 times earnings. All these things have to be from like something where the stock price is low, the valuation is low, where all of these things can make a difference. In other words, big growth has to be somewhat like surprising. In other words, it's be like where people have very low expectations, so they're not expecting high growth, and as a result, the stock prices are low and the valuations are low and cheap, as I like to put it. Right? I mean, the buybacks have to make a difference in the sense that they're absorbing like enough stock at cheap prices that they're making it scarce. It can't be at high prices. So I've laid out this transition market view, and it's starting to come. I mean, we are seeing increasingly like there are stocks in the silver tier at ATG Digital, like Aurora Innovation, which has survived the cull of of companies that were pursuing autonomy. I think there were 4 or 5 companies, and we're down to 2: Tesla and Aurora Innovation. I don't really count GM or Google because they're not really pursuing this as a business. I mean, to pursue this as a business, you kind of have to bet like with a significant amount of capital that you're going to go do this. You're going to do it at scale, and if you succeed, it's going to matter. It's going to matter. For Google, for Waymo, with I think they're in like 3 cities. I mean, unless they're willing to scale up nationwide and then globally, which would require them to commit, I don't know, 50 billion, 100 billion. It's not that they lack the capital. It's just I think they lack the conviction to do it. And even if they did, like it's to move the needle for somebody like Google, it has to be like, relative to a huge business, which it's search business. So yeah, there's nobody else. And GM with its cruise software, I mean, I don't think they're actually like really anywhere. So you've got like essentially that down to like 2 companies, and Tesla is about to have its October 10th robo-taxi event. So that's going to be in 9 days, and they're going to reveal some new hardware, I imagine. I don't know. I mean, Elon. I mean, I don't think Elon's going to come out there and just like show us nothing. I think there's going to be some show and tell. I mean, after all, they postponed this by like 2 months. It was supposed to be on 8/8, and it's now on 10/10. So they're going to show us something. Last night I downloaded full self-driving for my Cybertruck. I'm going to make some video of it and post it on X. Maybe I'll give some of it to Dean, and he can put something up on YouTube as well. But follow me on X if you want to see it. And I've had full self-driving now for the better part of like 6 years. So like I've kind of like watched this thing go from essentially being very crude to now very sophisticated. So we know that Tesla is definitely like going to do this. Then Aurora Innovation like is starting to make new highs. Why? I mean, I just look at this like, okay, like the market and investors are growing less skeptical of autonomy. And there's only 2 companies. So remember, one of the things that I told you that investors seeking out higher returns are going to pursue is growth, something that's scarce, something that higher rewards. Well, there's only 2 companies pursuing autonomy essentially in the world, right? In the world. I think they're going to come and bid up Tesla, obviously. I mean, and we can see that Tesla has gone from like 130 at the low of the last 2 years to like now 250. And then most people have no Aurora Innovation. They never heard of this company. I mean, but if you're at ATG Digital, you know this. Aurora is the company that Uber, that, if they had continued to do what they were doing when Travis was in charge, they would have continued investing in their autonomy division. They sold their autonomy division to Aurora, and Uber still owns 25% of Aurora. But these are the only 2 games in town of any scale. So I think Aurora, I looked up Aurora, and I was going to write about it in my Substack yesterday, but instead I wrote about UiPath, which is another company that is, again, clearly being bid up. I mean, people are coming and they're sucking up the low price stock, right? Why? Well, because they can see like the world's moving in that direction. But going back to Aurora, they're planning to introduce, I think at first there will be a driver in the cab, but it'll be the computers that are driving. And I think their test route is between El Paso and I think it's Dallas or maybe it's Houston. I can't remember. And then in 2025, they're going to go for a 1,100-mile route between Phoenix and must be Houston, I think, or maybe it's Dallas. I can't remember, which is like 13 hours. And it's, it's a very pliable route, being that it's more or less like pretty much like a straight line, but it's a major route, and where people will want to ship and reduce their costs associated with that. So we've got things that are going on at every level. I mean, on a stock level, after 3 years of growth stocks just being crashed, they're low and they're cheap. The companies that didn't give up on the thing that is scarce in today's world, with is what? Actual genuine innovation, right? I mean, they continued, they pushed forward in the face of skepticism, hostility, regulatory overreach, whatever you call it. We're going to have some big returns. I mean, because the nature of the growth stock crash is that anything that had marginal technology that people really didn't have big conviction over, well, they gave up on it. They either gave up on it or the investors said, we're not going to give you any more money, so you're going to go to zero. And that happened. I mean, obviously that happened to us. I mean, put my hands up and take responsibility. I mean, too simple. I mean, it looked like it could be one of the leaders, but their technology in hindsight wasn't good enough, and they weren't capitalized well enough to make it. But Aurora's got enough money, and Tesla's got enough money, and autonomy is real. Why? Well, I mean, there's debate about this, whether there's like a shortage of drivers or not. But the reality that's more true is that people, like increasingly, especially younger folks, don't want the lifestyle of driving, like, as a profession. It requires them to be away from home, doesn't really allow for various things that, you and I take for granted. So, a lot of innovation is driven by the desire for low costs, greater convenience, greater access. And I mean, for us to drive in a straight line between two places, almost completely on highway, that's going to happen. I mean, because it's going to be far lower cost to implement that. So we're starting to see, like, again, the market look at these so-called crazy, wild ideas, which is essentially innovation, and say, like, I think this is going to happen. And with that, I've told you, like, well, in a bull market, investors look forward. In a bear market, they look backward and they shrink their horizons. In a bull market, they look forward. And the other element to this is, within the context of a 50-year interest rate cycle, we've seen this big up. And I told you that, like, in the 1940 up cycle, it took from 1940 to 1968 to get to 5.3%. In this cycle, it took us from March 2022 to July 2023 to get to 5.3%. So if I'm right, we are due a period when interest rates probably go back to, I don't know, I'm going to say between, I'll say 2.5%, 3%. And it's going to be a little bit at a time. I don't think they're going to cut like they did during COVID and take it to 2 and 0. That's not going to happen. Instead, it's going to be a drip, 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 drip down over some number of years. And we'll get to, I'll say the low, probably, I think the best case scenario interest rate get to is like 2.5%. I mean, 3 seems more real today, but it does depend on, like, what happens. And that is additional fuel, if you will, for all these things to, like, continue. In other words, lower interest rates mean that, like, people start to look forward more, innovation and growth and opportunity companies, which have their peak cash flows further out into the future than more mature companies, start to get more and more highly valued. So everything is now, like, in our favor. One big difference is the speed at which this is going to happen. Like, people, I think, are still very much in mind of like 2021, which is like these instant gains, hundreds of percent in a year. We're not going to have that. Instead, it's going to feel probably a lot more like 2016 to 2020, when there's ups, there's downs, but there's big opportunity. And some of these, like autonomy, we've not had cars that can drive themselves. We've not had, trucks that can drive themselves. The growth rate, remember the S curve is like this, right? We haven't seen the beginnings really of that S curve, like of for autonomy yet. And this is like a big, big deal. Just think how much of our lives are driven by, transportation. We go anywhere, we transport ourselves. If we can plummet the cost of transportation for transporting ourselves, for transporting goods, that would be like an enormous like cut in cost, increase in convenience, and access. There's so many people, especially at current prices for cars. Yeah, cars are unaffordable. To have robo taxis, yeah, that would be a huge, huge boon to a lot of people. And it would also, generally support. Lower prices mean lower inflation, which mean that maybe we'll get to 2.5% again in this cycle, which would be a huge boon for all of our stocks. That's just one example of like me laying out like a transition, like market, right? Where money trickles out of these highly bid up, very large stocks and seeks out something new. And they seek out something new because they're not like, doing this for like charitable reasons. They want to make money and they're chasing growth. They want the new thing. Why? Because the new thing is the thing that people don't own. And as those folks come in, they bid prices higher. That draws more and more interest. And the whole cycle of scarce, valuable, in demand, starts to get rolling again. We are seeing this as well in, let's see, that's what we look at in stocks like DoorDash. I mentioned UiPath, and I'm just going to mention that again. The stock isn't up yet, but if you're following the company, not the stock, you'll see that this company, their last quarter, their annual recurring revenue, which is essentially subscription revenue. They initially used to sell licenses, then they moved to subscription revenue, is up like 19%. And no surprise that the stock is sort of like bottomed out. Well, what does UiPath do? Well, let me get my Substack up because it's easier to explain using this post. Yeah, so I wrote this Substack yesterday, and I'm just going to click on this X post here. Oh, my computer is super slow, but okay. Struggling to get it up. But this is a post on X where someone automated their entire job that used to take, okay, it's finally up. So you can see this dude automated his entire job. So he says, my colleagues and I produce daily, weekly, and monthly reports based off raw data that our employer produces. These reports are humongous Excel files that need to be copied and pasted into each other, and the whole process takes 5 hours a day. I have obviously been in the financial industry a long time, and I've done desk jockey work like this. It is brutal. And as you say, 5 hours a day crashes our computers, and it's just painfully boring and mind numbing. In the time that I used to do it, we didn't have quite as good computers, where like you'd be loading this data in and then Excel would crash, so the computer would crash, and then you have to start all over again because autosave might not have been in place, or like, yeah, it was brutal. So this person says, for the past 2 weeks, I've been playing around with ChatGPT and Claude AI, coming up with Excel macros and other types of scripts to automate these tasks, from importing the reports on our computers, processing them to our sheets with formulas to export them to final report. The whole thing now takes 1 hour a day, which is wild. And he says, I don't think I could have ever done anything remotely close to without ChatGPT. Now, I know what people are going to be like, Paul, we've told you, buy NVIDIA instead. Look, folks, yeah, I mean, NVIDIA is a highly bid up stock. So you want to benefit from AI, you're going to have to find something that is less bid up, less expensive, less discovered, and where it can benefit from the movement of money into the stock. And a UiPath is exactly this kind of stock, because the truth is that this dude is exceptional. I don't think the vast majority of people can do what this guy did, which is like take all this stuff, put it into ChatGPT and Claude AI and get it. No, most people just don't have that capability. So they're going to want like a ready-made solution. And a ready-made solution is something like what's called robotic process automation, which is what UiPath does. Essentially, everything that this guy did, UiPath's app, software, whatever you want to call it, does. And you just kind of like give it a structure and how to operate, and its AI will do all of this, check all this information, and will do it, pretty cheaply. As I laid out, I mean, imagine like a large company that operates 50 subsidiaries across multiple countries, all the suppliers, customers, all the invoices that come in, all the stuff that needs to be integrated to come up with any kind of a report, let alone like imagine like an annual report for these large companies. I mean, this kind of technology, would make it where far more accurate, far more convenient, far faster, and definitely cheaper. So UiPath is a kind of company that meets the standards of what I'll call like the transition market. Like, I mean, UiPath could be the Palantir of like of 2025, as people like comes like, oh, okay, well, like, yeah, you see professional investors, they're like, okay, well, NVIDIA is incredibly bid up, and like even if it like succeeds at growing at 100% a year for the next 3 years at whatever 30 times earnings or whatever time sales or trades, we don't think like there's somebody else that wants to come and bid it up even higher. But on the other hand, the UiPath, which is quite it's low, and they've got like $1.7 billion in cash or something like that, right? I mean, and oftentimes buybacks are done when stock prices are incredibly high. But let me put up a chart of UiPath. We'll look at where this stock is. I mean, this is one of these crashed growth stocks. This is a 5-year chart of UiPath. Yeah, I mean, you can see the high is somewhere in Timbuktu. I mean, since it's come public, I mean, obviously it's done pretty much nothing but go down. But they've got cash, they've got a business that's growing. It's scarce. How many other robotic process automation companies do you know? I don't really know of any. There might be smaller ones, but this is definitely the biggest one that I know of that can actually address like lots of small and medium-sized businesses that likely cannot hire the superstar data analyst. And they're like, yeah, but we want access to this form of artificial intelligence. How do we automate all of our reports so that we can get them daily, or maybe you want them hourly, whatever you want. This is the kind of stock that is like, a transition market stock that I'd say the vast majority of people don't know about. And what we are seeing in the markets by seeing stocks like Aurora Innovation starting to come back, or DoorDash making new highs, is that there is a market for this. The market for it means the market is shifting to this. People are seeking out, once again, the kinds of ideas that we focus on at ATG Digital. I've coined that as the OGI market, opportunity, growth, and innovation. That part of the market has just been crushed, destroyed for like 3+ years as interest rates went up pretty much in a straight line starting March. And now we got like everything sort of like lined up. In other words, the vast majority of the market is kind of like uninvestable for new money, which is like this, the S&P 500, 70% of it is like in the top 100 stocks. So it's so highly concentrated over there. Very, expensive. So new money is going to seek out something that is low, it's cheap, something that is growing, which creates its value, something that is scarce, and something that stimulates that desire to go and be like, I want to own that. Like, that's new. That's going to grow. That's going to be big. I want to own that. So the same things that really drove that period of time where we made the most amount of money, which is like, between, let's say, 2016 and 2020, when, that was a period when, I was super bullish on like the internet of chips and things like that. But this is like the next wave, right? And is going to go into different places than where we were before. And that's kind of like where we focused our portfolio. I mean, I've talked in these YouTube videos about biotechnology, genetics, fintech, obviously crypto. There's, things like Aurora Innovation, which is autonomy, which is a kind of robotics, RPA, which is kind of robotics. We are shifting. The market's moving. And, it's always chasing in the end, during periods, where investors want to make the investment. They are looking forward. They are bullish. They are optimistic. They are positive. They want to make money. They want to put their money in markets. And now we've got, like I said, interest rates are swinging the right way. The vast majority of like the big stocks that the easy trades, not really investable for new money, no real reward there. So they're going to come. They're going to come for our stocks. And we're going to have, some incredible years. I think like 2024, there's talk like of another 25 basis point cut. So with that, more money will start to shift and go into and start to search out what I'll call these transition market stocks, which eventually, given that this is the broad construction that I have, right? Which is like, okay, in the 1940 to 1980 interest rate cycle, it took from 1940 to 1968 for interest rates to go from 0 to 5.3%. So we are going to sit in some range between 0 and 5% for 5, 10, 15 years. And we will have bull markets and corrections within this thing. But you know what? For our companies, they have cut costs. They have focused their businesses, on what produces profits and cash flow, 5% is not an extraordinary hurdle. Like, I mean, it's a big hurdle when, in 2021, when the assumption was that we were going to have zero interest rates pretty much forever. But no one that's in the OGI sector is expecting zero interest rates anymore. They've gone through a horrific bear market, a cull of like biblical proportions. And now, we'll see the benefit. There's far fewer companies to invest in. There's far fewer companies investable. The technologies, platforms that either the folks who were running the companies didn't have enough conviction, or else investors didn't have enough conviction. Many of them have been wiped off the face of financial markets. So the survivors, yeah, I mean, they're scarce, and they are valuable, and they are in demand, and they are going to get bid up, in my opinion, in my judgment. All right, I see a lot of comments here. Before I take your comments, just a quick word about what is going on in my state of North Carolina. I don't know. I know we have subscribers from all over the country. I know we have people even from international folks, but there's just been a devastating compounding of circumstances in Asheville, Boone, and parts of Tennessee as well, in Georgia, and in North Carolina. And I just wanted to show you some of the destruction that has been wrought in these places, and spare a thought for these folks who have pretty much lost everything. And we're talking about a city of like Asheville has over 100,000 people, and they're talking about the death toll being like 1,000, which is 1%. I mean, the destruction here is of a scale and magnitude that, yeah, is pretty much unthinkable for me. And the end of this video in particular is just absolute. I mean, everything you're seeing there used to be proper road that's just mud caked, but yeah, everything is just utterly destroyed. And in case you're unaware, I just want to bring it to your attention. And I, of course, living in North Carolina, I feel a need to help out. Obviously, I've been donating. I'm gonna grab my kids and we'll go to Costco and load up my Cybertruck and find a place to donate some goods, and make some sort of small contribution to all these folks. But with that, let's take the questions that are there. Kevin says, good afternoon from Lakeland, Florida. Good afternoon, sir. Welcome and happy to see you on the live stream. Rashad, a regular live stream attendee, says, good to see you, Paul. Same with you, Rashad. Good morning from Mr. Wenzel. Good morning, sir. Pastor Tanks gives me 3 salutes. Thank you. I hope I'm pronouncing it correctly. Jasek. Greetings from Germany. Subscriber since 2018. Strong hands, sir. Strong hands. Thank you. Miss Puppy Pup says, good morning, Paul. Thank you for sharing your knowledge. Well, I am grateful, truthfully, to share it. I mean, I have been in markets for 30 years. And initially, when I used to think what's the big deal? I know this, everybody must know this. But one of the things that from being on social media, it makes you understand that people don't know that, which is people don't know about big cycles. People think that when prices go up, that's when you invest. And, and then you get trapped into places because, of course, our psychology is very much driven by how we feel. So of course, at high prices we feel good, we want to invest. Low prices we feel bad. So like I'm grateful to have all of you truthfully to serve, and thank you for attending the live stream. Philosophic Precepts, another regular. Welcome and good afternoon to you. What do I think about CLH? Okay, well, let me look this up and put this up on. I have to reach forward here because my keyboard is not in the best place. Okay, let's share this tab. Celsius. I think this is the drinks company, if I'm correct. Let me look this up. I'm pretty sure that's right. I like their drinks. I have tried them. I'm just looking this up. Yeah, it is the drinks company that, I mean, if you go to any convenience store, gas station, etc., you'll see one of their drinks. I think this was just a very bid up stock. I'm just going to look this up and put up a long-term chart of this. Yeah, I mean, look, I mean, this was a $1 stock. Let me just put up like all the history. So what? I mean, this comes public comes IPO at in 07 at 8, goes down to 4 cents. And then, it's on a huge run. Yeah, I mean, the nature of these businesses are generally, once like a group of people like drinking Celsius drinks, they'll continue to drink it. So it's got qualities of a good business, but like, yeah, a run from $4 to what, 90 to about 100. Yeah, it's going to draw sellers, and it's probably going to take a little bit of time to wipe out like sort of like the folks that want to sell. And then think of like the market for a stock as a market for anything, right? I mean, which is that people like to buy high and rising prices. I mean, that's what draws an audience in to buy a stock. So if you don't have that, then it takes a little while to like take in all of the low price stock. Now somebody's got to hold that stock for a while and not sell into whatever news that comes that is less than whatever that people that own it, that generally bought at higher prices are willing to sell for. And then you got to make the thing scarce. And then when the growth starts to, again, be above expectations, then new bidders will come in and bid it higher. So if I were to guess, we just got to go through a period here where this probably has to go a little bit lower, bottom out, find conviction buyers who are willing to hold through low prices. Then on the other side of the cycle, you get higher prices. That's my 30-cent view of this. Hey, Mom, that's my mother, who tries to attend as many of these as she can, all the way from India, which, is the time difference is big. Hey, Mom, good to see you. Domo. Let's put that one in to the thinkulator, if you will. Well, Domo is a tech company, and my general view on tech is this, which is that we are used to the idea that tech dominates markets, but this is a pretty mature, old idea. I believe that into the next cycle, we're going to see a normalization where we will have multiple other sectors dominate these markets. And so I'm pretty sure, like, yeah, if I look at this is going to be a chart that's got a big spike and a big, and a big drop. And it does. So this is 5 years. Yeah, I'm not a buyer of these kinds of stocks here. In general, my viewpoint on tech is that there are a lot of sellers ahead for most tech stocks because of how bid up most of these assets have been through the ZIRP period. ZIRP meaning zero interest rate period, and that's this would be in that category. I would look for stocks that are low and cheap in some sectors that are not as well owned. And that way, as people come in to buy, they bid it higher. Anthony says, "You're the man." Thank you, sir. Tesla's my biggest holding. My question on Tesla are not adversarial, rather for my education. Sounds good. How long until cyber taxis on the road after their announcement of 1010? Tesla tends to take 3 to 5 years after announcements to implement. That's why I don't consider them first mover versus Waymo. Well, the first movers don't always make money. It's the folks that build a business around the innovation. That's who makes money, right? I mean, if I already knew this in 2021, but I had to relearn it again because the amount of companies coming public with so-called first mover advantage and some supposedly groundbreaking technology or some groundbreaking innovation that has no end market, right? I mean, so you got to do the innovation has to be something that you can build an actual business that people will pay for. It has to scale so that it's worth it to stay in business. And then you have to, see a pathway to like making an actual profit, not it being like some experiment. And Waymo is kind of like a limited scale experiment. I mean, relative to the scale of a multi-trillion dollar company like Google, Waymo is not even like a gnat. I will do nothing. They have no plans to scale through the United States or the world. And it would have to be at that size for that to make any difference to Google stock, in my judgment. Yeah. But on the other hand, Tesla, they are making a bet. I mean, Elon is not the type to put out like small little things, right? They're doing all this. They're making a bet that their investment in full self-driving can be converted into something where it's completely automated robo-taxis, right? They have spent, my best guess is probably $5, $6, $8, $10 billion on FSD. I use FSD. I'm stoked that my Cybertruck has FSD because I was missing it. I haven't been doing a lot of long drives in it because I've been waiting for it. And I know how well this works. Now, I have not been in Waymo, but I understand Waymo works pretty well. But remember, Waymo is geofenced. Once you get outside of like a small city area, it doesn't work. It'll just stop working. But FSD works anywhere. You put a car down and the cameras work as eyes. Yeah, and it's essentially taking a neural network of information, video information, and making judgments, determinations, decisions based on the situation of the moment. That's in a totally different category than a map-based, a robo-taxi that is very much just like, okay, I can only operate in this very defined space. I assume you're asking about KTOS. Let's see here. What is KTOS? KTOS is, oops. KTOS is Kratos Defense and Security Solutions. Let's, this is a stock that's clearly being bid up. I don't know this company particularly well, but I would have to go and look at the business and see where they are in the cycle to be like, okay, but clearly on a short-term basis, there's somebody willing to pay a higher price for this stock. But at the same time, you can see there's also been a lot of people, out in the past that own the stock at much higher prices that are probably sellers at higher prices. My mom responding again. Randy Wellman always reminds me to tell folks, please smash the like button and also subscribe, please. We can definitely use more subscribers. What do I think about Lemonade? He's not asking about Lemonade, Lemonade, the drink. He's talking about Lemonade, the stock. I am bullish on Lemonade, even though the stock don't look great. Why? Because this is a digital based insurance company that has the potential to be very big. Right now, it's quite small. Let's see, Lemonade is a $1 billion company, but what Lemonade has is that they have a digital platform on which to build an enormous insurance company. They are increasingly going nationwide. And with that, they will get the benefits of big scale. It is owned in our gold tier portfolio, but obviously, we are not yet seeing the signs of people coming to bid it higher. So, as I like to say in the rules of the game, buy low, buy slow. What about solar energy and interest rate sensitive Enphase? I am bullish on Enphase. Let's put up a chart here of Enphase. Make this a little bit bigger. My belief is that, yeah, this has bottomed out here. I think new energy, solar energy, is in a long-term bull market. Obviously, we've gone through a short-term bear market for these new energy stocks that has like crushed Enphase, crushed Solar Edge even more. Both of those are in our ATG portfolios now. To me, it's inevitable that, like, the transition to new forms of energy are ongoing. There's obviously going to be interruptions. We went through a period when, there were a lot of Enphase inverters and others being bought. We'll see those again. I think over time, you will see that many houses will come default with solar on the roof. Tesla would participate in that process. Enphase would, Solar Edge would, and as would any number of other of these companies. Not yet, obviously, in hyper bid up mode. This is something that in my opinion, is low and cheap, and I'd be accumulating if I was buying at low prices selectively. Peter from San Diego, welcome, sir. Thank you for attending. Sunny says, I'm in LA. Driverless Waymos are becoming ubiquitous. Yeah, I mean, I understand they work great in San Francisco, and I've just wanted to just go and check it out myself. I've been threatening to just take a flight and go check it out myself and be there. But FSD is a completely different thing. I mean, it's a neural network taking in video data information, turning it through a supercomputer. It's actual it deals with the situation at hand. It's other using cameras as eyes. Completely different. Martin says, you helped me get a down payment on a car in 2018, and I haven't gotten a stock since then. I'm also done paying and we'll be back at listening to you again. I can't thank you enough. Thank you, Martin, for your kind compliments. I appreciate you. Thank you for attending the live stream. You think there will be more Teladoc or Mankind trades? Yeah, I am. Teladoc now, I mean, clearly my video on Teladoc in hindsight was probably about maybe 3 weeks too early. Like, it had to go through one more crash. And it just shows you, once stocks start being liquidated by people, you just can't know what low price they're willing to take. But it doesn't mean that that's the value. I mean, Teladoc is a substantial, robust network of doctors and patients exclusively using telemedicine, right? They don't have any on-premise locations. It's sort of like the Amazon of healthcare, if you will, which is it's a pure play on telemedicine. Is there a future for that? I think so. Are we going to have more of that in the future? For sure. The folks up in Western North Carolina, I mean, as it becomes clear, what their medical needs are, is it going to be easier for them to connect using Starlink and get care using telemedicine rather than finding doctors, surgeons, healthcare professionals can get up there? For sure. So, I mean, it's very clear to me that long term telemedicine is going to be bigger, and we'll be doing more trades. I assume you're referencing um, options trades in our platinum portfolio. And yes, we will be doing more of those trades. There in the platinum options portfolio, what we're trying to do is capture, like, based on analysis, like, hey, is big money buying in? Because when they buy in, they have no choice but to bid up, because you have to expose your order to the market, right? And so the intermediaries, the market makers, investment banks, they can see that. They will either step in front of a big order and capture those shares themselves to sell it to the big hedge fund, whatever. So when we see that type of activity, that's what we're trying to jump on. As I like to put it, we're like ants trying to jump on an elephant trade. So when we see, like, that kind of pattern, that's what we try to do in our platinum options portfolio. Who has the lead in the cannabis market? The cannabis stocks have all tanked. Will they rebound this election? So many of them, truthfully, are in various forms of difficulty. The biggest issue continues to be that there is no legal market of sufficient size to support a huge growing industry. We own Tilray and we sold it out just because I'm like, well, we don't want it. We can't have a portfolio of 100 stocks in every tier. We've got the silver tier, we've got the gold tier, we got the diamond tier. There has to be some conservation of capital mindset, which is you got to go to the opportunities that are the most urgent, the most critical, the most present right now. And everything that I'm seeing doesn't tell me that cannabis is one of them. I mean, we need full legalization in the United States. We need their banking, set up to be fixed. I'm sure there will be another cannabis bull market somewhere. It will come just from monitoring the businesses, which will start to grow, but without a mass market that is willing to spend and that is legal, which I think is going to have to be the United States. It's hard to see how these can scale up and generate the kind of growth to make them go back to where they were. That's my view. So this is, I think, Peter responding to what I was talking about. Sonny says, really enjoyed your MicroStrategy clip. Have a look at CSLR. TJ Rogers, emphasis new CEO, been Enphase since 93 cents. Wow. Yeah, that's amazing. I will look at CSLR. Let's see here. Yeah, I don't know this one at all, so I can't really speak to it. I won't really put that up since I really don't know the company at all, and I would have to look at it. All right, a lot of questions. We've gone over the magic 1 hour moment. I didn't talk about Bitcoin, but I want to spend 2 minutes on Bitcoin before I say goodbye. I've done, I think, more work on Bitcoin in this year than I've done on anything else, and everything says that these are the last couple of weeks where we see Bitcoin trade in this range where it's been in for 8-9 months, between $60,000 and $70,000. From here, all of the research based on price patterns, based on sort of the mathematical element of Bitcoin, which is about finite supply, 21 million coins, the programmed new supply shrink of 50% every 210,000 blocks, smashes against the human elements that matter to us, which is what? Well, the supply of whatever Bitcoin is expressed in. Remember, we think of Bitcoin in dollars, but Bitcoin is just Bitcoin, right? I mean, you could theoretically express it in terms of leaves, cars, houses, clouds, water molecules. You could express it in terms of anything. We have obviously express it in terms of US dollars. So when you now get where Bitcoin scarcity is now 6 months old come October 19th. The halving was on April 19th. So new Bitcoin is now like, yeah, it's 50% more scarce than it was on April 19th. And then we've got the human elements that we focus on, which would be what? Well, it's everything to do with the fiat-based financial system, interest rates, money issuance, obviously price psychology of human beings, of us wanting generally high and rising prices. Yeah, these are going to smash together starting like in 2 to 3 weeks. That's how it's happened in every previous post-halving cycle. And everything says that Bitcoin goes to $100,000 by the end of this year. Seems unthinkable today, but that's what it says. And what the math side combining with the human side of Bitcoin says is that the next peak is in the range of $1 million. That seems mind-blowing even to me. And truthfully, the first time I came across it, I didn't want to say it because I felt stupid, dumb, and a little foolish. But look, I mean, the essence of that is this, which is that you have something that people desire that has actual finiteness, like 21 million fixed. Under no circumstances can you appeal to the Federal Reserve. Can you appeal? There's nobody like with mathematical precision. That's 21 million. With mathematical precision, its supply gets halved every 210,000 blocks. And then there's all the stuff that, like, that is about like what Bitcoin is expressed in, which is in US dollars. But obviously, if you were in Japan, it would be expressed in yen. If you're in Argentina, it might be expressed in pesos. Whatever it is, like US dollars, that supply and demand element changes how, this would be valued. But we have got the Federal Reserve cutting interest rates. We have an incredibly pumped up fiscal spending going on. It's like, I forget the numbers, but we are spending vastly over whatever we collect in taxes, which, I mean, has to come from somewhere. It's coming from obviously more borrowing. So there's more supply of the thing that Bitcoin is expressed in. Then we have the demand factors from the human side, which did not exist in the 2020 cycle, which is these Bitcoin ETFs, which is, I think MicroStrategy came about in 2020. There are now, I don't know, MicroStrategy now has so much more Bitcoin than back then. There are copycats in a small way. There's somebody doing it in Japan. Marathon Digital is doing it. ATG Digital, we are putting all of our excess cash reserves into Bitcoin. So everything says sometime like this, about about this time next year, Bitcoin is significantly higher, life-changingly higher. People, of course, want guarantees. People want certainty. I can give you that. I only give you analysis. I can give you, information from my perspective based on all the work that I've done. And all the work that I've done says we've never had an asset like Bitcoin. We've never had an asset where the new supply programmatically shrinks. And then on top of that, where we have seen over now, 2012, 2016, 2020, 2024, 4 halving cycles, human beings respond in the same way to that programmatic supply shrink. They have bid it higher significantly. Sometimes, a little bit more, sometimes a little bit less, which is related to the underlying conditions and what it's expressed. But we have seen human beings in financial markets come and desire it at higher prices. And we've seen that now through 4 halving cycles. Is the 2024 halving cycle going to be an exception? I don't think so. Is going to form out in something similar to what happened in 2012, 2016, and 2020. And we are in this, like, yeah, we're in this period where it is like, about 6 months after the halving where, yeah, the money starts to come in because all the folks who are going to sell because they missed out on the high in 2020 and 2021, they've sold. The weaker miners that have to sell to stay in business, weaker miners, why? Well, I mean, on April 19th, their Bitcoin price didn't jump double, but their reward halved. So they start selling their Bitcoin. So that produces like supply pressure uh, onto Bitcoin. And then as short-term traders now just come and even need to accumulate fairly small positions, there's just no Bitcoin and they're forced to bid up. And we are entering this period that's there. So we're almost there. I mean, October 19th is what, like 18 days away. So that's 6 months with the halving. So I just want to bring that up. And with that, I mean, I talked about this in the Diamond Tier update. Those of you who are ATG's digital subscribers, go watch it because I talked extensively about this and talked about this. Let me go to some more questions that have popped up. SunPower was sold. Is my stock worth zero? It does seem that way. Yes, it went bankrupt and it will probably stop trading, or it will trade with a queue of some kind in the over-the-counter market. But yes, SunPower went bankrupt and went to zero. This is something that at the bottoms of markets, you will see companies in huge difficulty that had leverage go to zero, and we owned it. And yeah, essentially we took a huge loss on it. I always hate to do it, but the nature of markets is that, like, there are risks. Obviously, there was like something where, the Norwegian oil company gave them money. I thought that would give them enough liquidity, but it wasn't enough. And so they went to zero. Yeah. Yeah, I don't know CSLR. So that's one thought. Thank you. Thanks, Liz. I agree. I think people who are in it, it's obviously you're taking on some risks, some uncertainty. There's always the unknown, but for big money, it's at least worth like a little bit, of risk. All right, folks. I think this is the longest live stream I've ever done. Tell your friends. I'm happy to answer questions, whether it be on our stocks or give you my view of what, of whatever that's there. My goal is to try and serve folks as best that I can. Let me quickly just say, if you're interested in subscriptions with this kind of analysis, this kind of way of seeing the world, atgdigital.media. Subscriptions start at $9.99 per month. Thank you for all being on the live stream. This is Paul saying